Gareth, welcome back to the dive.
Hey, thank you for having me back.
Okay, so let's start with all the talk about the yield curve and equities. How much attention do you pay to treasuries as part of your trading strategy?
In this day and age, it's the main thing, believe it or not. It's every night before I go to sleep, I take a look at what the yield is doing. I take a look in the morning, and we really follow it throughout the day. Usually, bond auctions that usually occur on 1 p.m. Like for instance, there was a 30-year bond auction today. In historically, you never really cared about those much. Now all of a sudden, they are a huge thing to watch. In fact, we've seen yields move off of them the last few days. So you have to watch the yields right now because it's the driving force between what the market does, whether it's up or down.
So, how important do you think inflation data is moving forward?
I think it's very important. In fact, it's the driving force with what the tech sector is doing. We've seen that when yields rise, tech stocks are selling off pretty precipitously. And then when they fall, tech stocks are bouncing back. I mean, we've seen Tesla make literally $100 moves in a day based on yields. So it's very, very important. Inflation is going to be a forefront thing here going forward. We're going to watch to see what that inflation data comes out to be over the next couple months, which I think is going to be pretty big. I do expect yields to head towards 2%. I think it's naive to think that yields won't go higher, considering even before we printed trillions and trillions and trillions of dollars, yields were, above 2% or right around 2%. And here we are coming out of COVID with lots of stimulus. You have to assume yields will go back to at least 2%.
Okay, so let's skip to cannabis now. We saw some of the US cannabis operators appear on CNBC yesterday. What are your thoughts on these large US cannabis players listed on the OTC markets?
Yeah, so I've been playing around a little with the Canadian ones, Tilray and such. Stocks like Curaleaf, which trade on the over the counter, the charts themselves are not the best. And again, I don't know if you guys can see my chart here, but what concerns me here is that you have a potential head and shoulder pattern. Here's your left shoulder, here's your head, and here's the beginning formation of a right shoulder. So if you break this neckline here, which is right around $14 or $13.85, I am worried that the stock could have a leg down, potentially as low as about $10. So for me, these are kind of a wait and see. I love the story. I think that eventually, federally, you're going to have legalization in this country, but I don't know if it'll happen in the short term because the Senate is so split. The Democrats have the edge, but Joe Manchin, he definitely isn't on board, and they're going to need him on board. And I'm not sure if he'll get that through in this next 2 year term.
So, do you pay attention to social media for trade ideas at all?
I do. The weird thing about it though is that I use it as a contrarian factor. So as a trader, I'm all about being first in a trade and first out. I don't like following a herd. So, when you talk about social media, when everyone's talking about social media, I have a hard time paying up for something like GameStop when it's gone from $50 back to 200 or 300. In fact, yesterday I was actually shorting GameStop when it was higher. In fact, I can show you actually my real trades here. I took a snapshot of my account. I had to snapshot it and then block out my account number for obvious reasons. But here you can see that I was in GameStop multiple times yesterday, which was March 10th, and I was basically shorting it at different points. And I was able to pull almost $40,000 in profit out with only one small losing trade here. And, basically the thought process is that when the herd is in, that's when the top is going to form. Now, GameStop is a rare situation where it goes way beyond anything you could even imagine. But having said that, you just wait and wait and wait, and you accumulate small positions, and eventually reality sets back in. So I know it sounds weird, and to not go with the crowd, but I feel much more safe, or I should say safer, being on the opposite side when it all comes crumbling down.
Okay, so gold has started to show some strength over the last few days. How do you feel about gold right now?
That's a great question. So I added to my gold holdings recently over the last week. I did so because gold continued to push into key support. In addition, the gold miner ETF GDX was hammering on support and actually started to bounce even while gold was down. And historically, the GDX, which is the gold miners ETF, it has actually led the gold move, which is kind of weird, right? You assume that gold's price would lead the miners, but it actually has been the opposite historically. And so once I saw the GDX starting to build a base and turning up, even though while gold was selling off, I then started to accumulate more gold. So I'm very bullish on gold. The long-term thesis is very obvious that if you're printing so much money, gold has to go up. Just like all commodities have to go up, just like Bitcoin eventually will go higher. So that's the thesis there. On a technical basis on this chart here, you can see the GLD hit this very good support level right here at this low. And there's a channel that we've been in on gold on the GLD here where we came down right to the low end of that channel. Notice how both trend lines intersect with price right here. That again is a beautiful level, and that's the line in the sand. As long as you hold that line now, gold is a strong buy in my opinion.
Nice. Okay, so what are some of the other names or trades you're watching right now?
One of the trades that I just took in the last day was a short on Viacom. And the reasoning here is pretty simple. It doesn't take, a lot to see that the stock is ridiculously overbought. It has had a monstrous run. Historically, this is a stock that trades relatively low on the PE ratio side. The PE has gotten ridiculously expanded now to over 20, which, you're talking, big cap growth stocks when you get into the 20s on the PE ratio side. I understand that they launched Paramount Plus with Viacom CBS here. So you have that potential for a streaming service. But let's be honest. There are so many streaming services out there. They're all not going to be winners. Netflix will be a winner. Disney Plus will be a winner, probably Hulu. But some of these will fall by the wayside over time. Viacom, in addition to being overbought, also has an RSI of over 80 right now. When I see a chart, and let me just show you this on the chart, something very, very cool here. If you go to your monthly chart and you zoom out a little bit, if you take the high pivot from 2007 and connect it to this high pivot in 2014 and the high pivot in 2016, you basically just pierced that trend line with a 3-bar monthly surge. For me as a trader, those are things that I watch for, accompanied with the RSI being over 80 as a sell signal in this stock. So I'm short this stock. I'm looking for a pullback to about $70.
All right, well, thank you so much for joining us today, Gareth.
Thank you so much for having me. Have a wonderful day.